What you need to know is that the history of the stock market for, say, 200 years has been magic at compounding money, massively magic at it, more than any other asset you can own by far. So Jeremy Siegel at Wharton did a really interesting study to show essentially that investing in the stock market is just the best thing that you could ever do. It's the best asset you could ever own by far. What he did was say that let's go back to the year 1800 and let's have $1, a US dollar in the year 1800. And then let's invest that dollar in 4 different assets. The first one is let's just leave it alone, put it under the bed and watch it for the next 200 years and see what it will buy 200 years later. So what we're going to do in this study is say, what's the buying power of that $1 200 years later? Today, it buys 2 cents worth of stuff. So the mattress didn't work. Inflation crushed the buying power of that dollar. Or we could put the dollar into gold. You get $3 worth today. $3 worth. So it will buy the equivalent of $3 worth of $1,800 in the year 1800. So gold did okay. It did prosper a bit. Now, what about bonds? That was the next big one. Well, if you bought $1 worth of bonds in the year 1800, by today, you would have $1,600 worth of that. In other words, if you were still in the year 1800, you could buy $1,600 worth of stuff in the year 1800 with your $1 of investment. Pretty good. That's a lot of money. About a 1,600 to 1 return. Or you could put your dollar into the stock market. This was what Siegel wanted to show us. You put that $1 in the stock market, you would have $1 million of buying power in the year 1800. So that's the whole point of Siegel's of study. And the problem with it is that you're not going to own stocks for 200 years. You're going to own stocks for much less time than that, and you need those stocks to perform while you're alive. And so we think about emotion as being one of the really, really big problems of investing on our own. And that's why so many people give their money to somebody else. They would, honest to God, rather have a mediocre return than to deal with the emotion of managing their own money. I'm just going to hope and pray that somebody's taking care of me and that 30 years from now, I'm going to have a good retirement. And that's not unreasonable, but a little bit not accurate as well. There are huge time periods that could crush your retirement plans where the stock market goes nowhere, 0 rate of return. Now, we have just had the biggest bull run market in the history of the stock market. Guess what's likely to happen as they start to tighten up interest rates, raise them up, as opposed to lowering them down, which they did ever since 1980. They raise them back up. What's going to happen to the stock market? 20 years of nowhere could very easily be in your future. And no financial advisor is going to tell you that. Nobody's going to look at your portfolio and go, oh, well, maybe this time it's different. Whatever it is, you don't want anything to do with the evil of money management. You don't want anything to do with it. You're just going to hand it over to somebody and pray to God that they do what they've been doing to it the last 30 or 40 years. And what if this time it's different? So we look at this thing and say, all right, you're trying to take emotion out of it by getting out of the game completely. And what I would think is you would want to be aware of that and realize that, yeah, when you do start to take on your own responsibility for your money, you start to grow up, be an adult, take responsibility for your future, not give it to some moron on Wall Street who could care less about what you're doing. This could be the year for you to change the financial direction of not just your life, but the life of your children. I mean, generationally down the road. Hey, thanks for watching, everybody. I hope you found this video helpful. If you want to learn more about this specific topic, make sure you read my book, Rule Number 1, for tips and advice. Join one of our upcoming workshops. They're linked in the description below.